Okay, should now be recording. Everyone get the record notice on the top?
Yes.
Okay, so um, to give you a little bit of background, obviously we're all starting new over on this new platform. So Jim and I wanted to make sure that we all had some training and some trading sessions moving forward. This is the first of what is right now a series of the next 2 weeks. Um, and the reason being, I'll give you a little bit of background to it as well. I've been nominated, I guess is the right word to say, to become an educator with Jifu. It's in the early stages. There's a lot of process to go through. I've already gone through a few steps. There's a few steps more. Nothing set in gold until set in stone until the contracts are signed. But obviously, it's very exciting times if that does come on. But Jim and I wanted to make sure that we've got all our people on board with what we have right now within Jifu, so that we're not left waiting for a week or two before we can get trading and get some training done on this. Um, the background for Jifu, the closest that we've got on Jifu is this Sniper um, um, scanner that we have, which is similar to scanners that we used to before, but it is not perfect. And the reason it's not perfect is, Jifu is transitioning to a new trading platform, and right now the platform that we have, which is this one, the Sniper strategy, you all know how to do that. I gave instructions. Go to jifulive.com, go down here to the scanner menu on the left. When it comes up, you go to the strategy menu on the right, and there's a drop down box, and you hit Sniper, and it'll come up. The drawbacks to this being is that all this is just set right now. We can't do anything to it. We can add things to it, so we can add trend lines, Fibonacci, etc. But as soon as we move off this scanner, everything disappears. So if I'm on NAS and I do some markups on NAS, when I switch to, even if I do let's say a vertical line due at, I think the next, I always put vertical lines on here um, with news coming up. And the news was coming up at, I believe, right there. So that will stay on there as long as you're on the screen. But if I hop to US 30 and look at US 30, then I hop back to NAS, that markup has disappeared. So it's not perfect. It is what it is. The language up here doesn't matter whether you have it on English GP or English USA. Does not matter. You can put Mountain Standard Time up here. That affects other timing within the site, but it does not affect the timing down here. So this timing down here is on Greenwich Mean Time, um, which is, hold on, just got logged out. Which is Greenwich Mean Time, which is 7 hours ahead of me over in Mountain Standard Time. Okay, so that's the Jifu scanner, and we're going to go through it because obviously this is what we have to work with right now. Um, and before I do that, we do have a disclaimer. I guess this is something I've got to get used to as well. Information provided in this content is for educational informational purposes only and should not be considered as financial advice. I'm not a licensed stockbroker, financial advisor, investment professional. Any insights or strategies shared are based on personal opinions and experiences not tailored to individual financial situations. Do your own due diligence before entering or exiting any trades. I won't be calling out trades. I'll be showing you setups. Before making any financial decision or investment, I strongly encourage you to consult with a certified broker, financial advisor, or other qualified professional who can provide guidance based on specific needs and circumstances. Investing in the financial market, such as stocks, futures, forex, indices, cryptocurrencies, commodities, involve risk, and past performance is not indicative of future results. Always do your own research and exercise caution. So that's the background to it. Now, what Jim and I are going to be doing, if all goes well on the educating front and I become an educator with Jifu, there's lots of changes coming down the pipe. We will be transitioning to a new platform. The new platform will allow us to make new strategies, and obviously Jim and I will be working closely together to get a strategy that's very similar to what we've been used to. I have one set up here on TradingView already, which again is very similar to what we're used to with the Bollinger Bands, the ranges, the blue and the red, the crossover. This is your trend line. People are used to using 238. I use 233 because 233 is a Fibonacci number. So I always use 233. It's very almost identical to the 238 that a lot of people use and that you're used to. This purple line is actually another Fibonacci number. It's a 987, and it does act somewhat of a magnet, so that may or may not stay. This is the stochastic at the top, obviously overbought at the top, oversold at the bottom, and there is a middle line there, 50% line, which does help us on our strategy as well. This is the RSI. This is actually missing on Sniper, and we can't add it. And I know you're used to when it's above this line, everything turns blue. And when it's below this line, everything turns red. We'll see if we can work on that as well. We're trying to figure out all the settings on this. But that's the kind of thing. I'm not saying this is what's going to come down later on. I'm just giving you a heads up that there will be changes coming. It won't be this year for sure. We do have a big convention coming up in Munich, and a lot of those changes may not even be announced till then. But the idea is, we have Manny Quinones, who's Director of Education. I've already spoke to him. I've already spoken to Carl Copeland, the CEO of Jifu. And so there are lots of changes coming down. So, we ask that Mel and Greg, Jim and I, ask that you be patient while these changes are going on. The big advantage, obviously, is we are in the kind of the ground floor with this financial education side of things. This only really started at the beginning of the year. And we've already added over 30,000 people to the financial education platform just this year alone. So it is something that's growing massively. We're right at the forefront of it. And, to me, that's the exciting thing is that we are right at the beginning. We're kind of at pre-launch with our team, obviously, but moving forward with Greg, Mel, myself, Jim. Obviously, you saw Corinne the other day on the Saturday call, has already joined as a cryptocurrency educator, and she'll be starting next week, I think. So massively strong team you're all aligned with. Got a huge interest in helping everyone succeed, and obviously we'll be doing our best to get you all the tools that you need and all the training that you need to be successful at this. But right now we do have Sniper. And so that's what we'll be talking about today. We'll be looking at some of the setups here. Again, even though we've got the time difference here, you've got if you've got an iPhone, you've got a world clock on there. It's very easy to see what the time difference is. If you're on Pacific, it's 8 hours difference. If you're on Mountain, it's 7 hours difference. Eastern, it's 5 hours difference to GMT. So just make that calculation yourself. You can see right here on this candle here at that is the market open, 7:30. And we did get a nice indication that we were heading up right the way back here, which is 11:35 on the time frame on Jifu. So I'm going to use the time frame on Jifu because obviously, hopefully you've all got that open at the moment, so we can all be on the same page here. So, again, we are used to this blue line here, the 238, 233. We are used to it turning red or blue when it's above or below. On Jifu, it just stays the same color. So you just look for this line. If the price action and candles are above the line, we're in buy mode. And if they're below the line, we're in sell mode. Excuse me, nothing changes there. These dotted lines, the red line at the top and the blue line at the bottom, just indicate the price range within this session. So if you go back, the session started here, and that is the price range there. This is the price range on the previous session here. Okay. Obviously, nothing much happened. We were pretty much rangy all the way through here. And we started making this move around 11:30 to the upside. We do have some news coming on. So always make sure you're checking your news. The first thing that you're going to do before you do any trading at all, I use myfxbook.com, the economic calendar, and we do have, we just had the PMI came out at just after, came out at 7:45. It came out right here. So again, we had market open, then we went rangy, then we had PMI come out, which was slightly better than expected. And we also, that was the global manufacturing, that was the ISM manufacturing PI, slightly better than expected, and the global manufacturing PMI slightly better than expected. They are red folder news, and mainly I look at red folder news on my FX book. We do have some yellow folder news coming up on you can see here, Fed Wallace speech is medium news, Fed Williams speech, medium news. That is at 1:15 my time, and 2:30 Mountain Time. Okay. So always be aware of that. Always know when the markets are opening and closing, when the crossover is on London and New York, especially when you're trading in the morning. So what does that mean to us when we're trading Jifu? What does that mean? Again, we're used to this kind of trading setup before. We are looking for the main trend line. We are looking for the secondary trend line, the blue above the red for buy, blue below red for sell. It's been somewhat rangy all morning. This is NAS, obviously, and Jim will probably pop on in a minute and show us US 30 as well and give you some other insights as well. But we have had some crossover down here. And the stochastic gave us some good, some great early indications that we got some nice cells popping up. So there was an early indication there. As we went back down through the stochastic, coincided with this cross here for a downward movement. We then got a reversal right here, um, right there, showing us that we are going up again, which we did cross here and went up here. So again, this stochastic is giving us, in this case, a little bit of an early heads up about where we are on the overbought and the oversold in terms of what we can expect. You don't use any of these on their own. Obviously, we got to use all the indicators together to determine when a trade is good for us to get into. I like to put a horizontal line here around the 50 mark because that also gives us an indication. You see it popped off here and went back down. Didn't quite break right there. Wouldn't break there, wouldn't break there. Came up, touched that, and broke back down again. So the middle 50 is something that I like to put on. It does give you a little bit more of a does give you a little bit more of an indication about where the stochastic is going. Okay, but the big trend, we did get an upward trend here to show that, but it wasn't much of a movement. Again, what I like to see on the Bollinger Bands is Bollinger Bands expanding. So I always like to see the Bollinger Bands expanding to help us in with a trade. Oh, it's not helping me here. So you can see the Bollinger Bands expanding here. Obviously, the big expansion here as well. So that's what we look for. So on this one, our signal was shown here as an early sign that we were looking to go up. Very strong movement started there, which again was right about here. That wasn't our entry though, because the other indicators didn't line up. But right here, we got our signal that we're on the uptrend. And this was before the open. So we're looking here, Bollinger Bands are expanding here slightly. They expanded more as we go out here. But our candles went above. I like the candle when it goes, when it either breaks both the red and the blue line. If one candle goes through the red and the blue line, that's a nice strong movement. If it then goes up into that upper Bollinger Band zone, that's strong as well. So for me, that was the entry there. We did get a little pullback here, which was indicated right here. But it barely dropped below the 50 right here and carried on back up again. So again, if you did get out there, you would probably have got back in here. Again, this is now just after. This is going into the zone again here, and now all the way up here, we're above the blue line all the way up. There's no reason to get out. This is not an engulfing candle here, not an engulfing candle here. Might have got a bit worried here, but this is all above the blue line. It's all in the upper Bollinger Band zone all the way until here. And so if you got in here and you got up to there, then we get our measuring tool and we can look at 64 pips right there on NAS. Clear as anything. You would have got out there. I probably would have got straight back in again right here, especially with the jump up through the stochastic here. Another very upright move there. And obviously, as we're coming down here, if we'd have got in there, again, there's no reason to get out, no reason to get out. These barely broke the oversold, and we would have followed this up all the way until here. I probably would have been nervous about this big jump here, going down through the 80 and then going down through the 50. So I definitely have my finger on button. This candle here is, yeah, it's just a bearish engulfing candle. So that might have given you pause to get out, although we are still in that Bollinger Band range up there. So again, there's not really a reason. If you got out, you probably would have got out about here if you did. But again, if you stayed in, I wouldn't worry about that because you're still in that Bollinger Band. Even with that red bearish engulfing candle, you're still in that buy range. I'm not sure why the upper range is red and the lower range is blue. It should be the other way around, but like I said, it is what it is. But if you got in there again, that would have given you another 145 pips. So with those two moves this morning, you'd have had over 200 pips already just using the sniper strategy. For me, 200 pips is enough for me just to call it a day right there, actually. So, you know, this move it's probably still got some legs on it. We haven't broken down out of the red zone yet. We've got a, you know, and this is the 5 minute that I'm talking about here. On the 1 minute, if you're scalping, obviously you would have been out there anyway because you were out in that out of that zone. But that would have given you some nice pippage right there on the NAS. If we go over to gold, we can have a look at the setup on gold. Does anyone trade gold in here? Paul does, okay.
I do.
And Tony, yeah, of course. So again, you know, gold can fluctuate wildly if you're scalping. Again, you want to be in and out quite quickly. But again, we had some good, we're in downward trend here. So it is a red line here all the way up to here before it turns blue. So there were some counter trend trades here, but the big trade was back here. So, you know, obviously here's your big trade on a downward trend. You would have got out there. You would have got back in. Well, you probably would have got back in there and then got straight back out again. Well, that's Friday anyway. So you would have taken that trade on Friday. Sunday started in a downtrend. You probably would have waited for this here to come in. We are blue below red. We're below the main trend line. We would have followed that all the way down here at least. And probably that's probably your exit there. So you would have got out there. We're still in a downtrend. I probably wouldn't have taken any of this. I mean, there's a few pips possibly here, but as the blue moves away from the red Again, that's showing more downward pressure on prices. And when blue moves towards the red, when you're in sell territory, when blue moves into the red, obviously we're looking at a possible pullback there. That was actually a decent counter trend, showing that there's some movement on a counter trend here. And anyone doing that could have taken some little trades here if you were brave enough. But again, I recommend not taking counter trends when you are beginning, because they will bite you more times than they'll come off. Here's where we broke the trend line here. No, I wouldn't have gotten any of that. I probably would have got in, my first buy would have been right in here. Bouncing off that, tried to go down, couldn't. You see we've lost our middle line here already. But you know, the 50% mark is going to be right in about there. You can't change the settings on this, so you have to kind of get as close as you can to the 50. Mine's at 49.85. That'll do. And so I can see where that is. Again, as it comes up through this 50 and shoots up, we got another cross, the blue crossed the red here. We're now in buy mode, and we would have gone up until this bearish engulfing candle, or better yet, this cross down through the overbought on the stochastic. So that is actually on that green candle there was the heads up. When that red candle formed, if you waited until it broke the bottom of that green candle right there and got out there, then you would have got your pips there. And that was gold. That's the 5 minutes. Looks like it could set up for another buy. Let's drop down to the 1 minute from second here. Wow, we're actually, yeah, it's not. We got to see a breakthrough here. We got to see the blue cross. Hi, David. We got to see the blue. If you could mute yourself out, David. If we see the blue going back above the red here, obviously we might get into buy territory. But the Bollinger Bands are not expanding at the moment. So again, that's a wait and see play on that. Let's go and see. So these are, I'll just show you back to my other chart as well. These are the 6 Forexes that I usually trade. So AUD USD, Euro USD, GBP JPY, GBP USD, USD CAD, and USD JPY. So I move those to the top of my trading view chart so that I can trade those. Okay. So again, if you go back to 4x over here and look at AUD CAD, we can see that's a nice downtrend here. Oh, lovely pips to be made here. There's our heads up there. There's our entry there. As it crossed over, we went from blue to red on the main trend line. Blue crossed down below red here, and we've got pips all the way down till we pop out the zone here. We did get a heads up here on the stochastic going up. Again, we're not looking for these buys, we're only looking for sells. This is all a bit iffy. I don't like trading. I don't like trading in the white zone at all. So, when you're in the white zone here, for me, that's a no trading zone. So when we're faffing around in there, I don't like that. So even though we got a signal here, um, our stochastic wasn't really matching up here, but we did get an indication on the stochastic here that it was going up. So we still got to wait. So there is our heads up on the stochastic that we're going down. And when we drop down into this blue zone here, when we see the blue line moving away from the red line, so right around here would have been your re-entry. So we're in sell mode because of this red line. We're under the red line. We're under the main trend line. We did get our first crossover here, so we took some pips here. We got out as we broke into the white zone here. We didn't get into any of this, but when we're back in the lower Bollinger Band zone here, this is our re-entry. The stochastic here gives us a heads up that it's happening. Down we go, down we go. We got a little bit here, but again, if you put that 50% line in here that I like to do on the stochastic, just about there. Again, we can see that, this came up, didn't break it, carried on down again. So we're all down, down, down. So we would have taken all these pips from here, down, and again, probably out. Well, this is again beautiful. The stochastic is giving a great indication that that is going in for a pullback right there. We got a lot of long wicks along the bottom right there. 1, 2, 3 wicks along there. So if he actually got out somewhere there, that was a very good time to get out. If you didn't, you would have got out here for sure when the green line crossed into the white area. So you would have got those pips all the way down there as well. And that's on ORD CAD. So that gives you some great ideas how Sniper works. We're very familiar with this kind of setup. So, don't be afraid to get in there and use this like you would. If there's, I'm going to see if, are you ready to jump in and share your screen, Jim, and show us some setups on US 30 that you've seen with Sniper?
Yeah, yeah, for sure.
Okay. Let me stop sharing my screen. Let me make you host. Make you co-host. So you should be able to share your screen now, Jim.
All right. Thanks, John. Thanks for that.
You're welcome. Thanks for being on board, having my back. I love it. Now you're going to listen to the real master.
Well, I don't know about that. All right. You guys see my sniper screen here?
Yep.
Okay. Okay, guys. So for myself, I like to trade indices. And the way that I utilize Sniper is that, I will just have the indices that I'm looking at or the pairs that I'm looking at open on multiple tabs. So for me, that's usually just the NAS and the US 30. So I have the US 30 here, and then I have the NAS here. And then that way, I can just flip back between the two. And you can even have 3, 4, 5 different tabs if you're looking at gold or you're looking at Forex pairs or anything like that, or you're looking at even US 30, but you're looking at it in multiple time frames. So if you want to look at it on the 1 and then you want to have it open on the 5 as well, for whatever reason, however your analysis works, you can just have multiple tabs and then flip between them. So that's, one little tip I can give you. And then one of the things here that we'll just explain for the newest people who are either on or might be watching this in the future is that John explained here. So we have this major trend line here, and we can refer to this as the primary trend line. And so when we're below the primary trend line here, we are primarily looking for sell opportunities. And when we are above the line, it turns blue here when we're above, and we're looking for buy opportunities when it is above. Okay. Now, these other two trend lines here, we can refer to them as secondary trend lines. And when we have the blue below the red, that means we are in full on sell mode because we are below the primary trend line. And then blue below red means that the secondary trend line is also showing us sell. And we're looking for sell opportunities all throughout here. As you can see here, the blue crossed above the red. And so currently, even though we are below the primary trend line here, these have crossed into an upward motion. And so we are no longer looking for a sell right at the moment. Now, of course, if these were to come back and cross back down across each other, then we would be back into looking for sells. So if we're being patient and we have established a set of rules for ourselves that let's say we don't trade counter trend, so we don't take buys when we are below the red here, then we would be patient here for either this to come back down and cross and these two lines to cross each other, and we would be looking for sells on trend, or we would be waiting for everything to cross above here for us to be taking a buy now, with this being above here and we being on trend again. Okay. You can take counter trend trades here, like here. I would recommend that when you become, more advanced, then you could take those counters. I do take counters, but I take counters when there is a secondary indication on why it would be good to take the risk on going counter. On this particular case, I can show you here. Right now, I'm on the 1 minute on US 30, but if I just go back to the 15, I can see here that there's been quite a bit of, an area down here of potential resistance, right? So we have this area here that was a, previous low that got broken, okay? And price likes to oftentimes, it can come right to an area of resistance and bounce right off, or it can even potentially break that area, because this is an area where sellers or buyers previously have stop losses. So when we take out those stop losses, it now gives the market makers the freedom to start, going in the opposite direction, because they've basically captured liquidity here for people that had stop losses here and even people that had stop losses here. And so it gives me more confidence to be able to get in a counter when I know there's a reason why this could be turning around here. Okay. The other thing that you want to note is when you do come onto the chart, it's good to do a little bit of higher time frame analysis, and do go back on the time frames and do look at other areas. I could potentially look at this as well and mark up this other area here and just see, like, okay, I want to let myself know that there's also a potential, resistance area down here in case price did want to come through here. Where's the next potential place that it could turn around? And, basic support and resistance areas are one of the easiest things to identify in terms of where price might go to or price might reverse from. Okay. And then beyond this, then, we got something way down here, which I might mark up for myself in case price did come all the way down here. And then now that I go back to the one, I have some potential zones here on where price could go. Now, as far as going on the way back up, obviously we already have a zone here from when the market opened. And then if I was to go back more, I have another zone right on top. This is actually the all-time high. And so I could mark that up if I wanted to. And I could change the color of these to mean something different if I wanted. If I wanted to change the color of this, you know, I could do so red, you know, if I thought that that meant something to me. But for now, I'll just leave the lines as they are and go back to the one. Okay. So with the times down here being static, I always trade in the mornings. Okay. But for you guys around the world, you know, it could be different when you trade. So for myself, I like to know when market open is in New York, which is 6:30 a.m. locally where I am in California. And that's always going to be 14:30. Okay. So all I have to do for reference is always just go back to 14:30 and see what happened, because I'm normally not on exactly at New York Open. I'm usually on a little after. But if I just look at 14:30 here, I can just see, okay, what did we do here? Well, we were pushing up, leading up to New York Open. We shot up, created this high, and then ever since then, you know, we came back down, and we came back down to this level where we had a previous higher time frame support. We broke through it, and now we're reversing. Okay, so this just gives me a little more indication of what has been going on since New York Open, where my previous highs and lows are, where my potential support and resistance are. Okay, now John already gave us ideas of what we're looking for in order for you know, entries, right? So for me personally, the entries that I like the best are when, you know, if we're below the primary trend line, I'm looking for sells. If the blue is below the red, I'm in sell mode. Now what I'm looking for is I'm looking for price to pull back far enough so that we get a pullback here on the overbought and then a break back down, okay, to continue downward with the trend. And so we got a little one here. And if you were live on the charts when this little one came here, you wouldn't have known that it was little. You would have just thought that, okay, we're breaking back down, right? If I move this chart to here and all you saw was price starting to go down right here, you could potentially look at that as an entry. Now that candle that it happened on was a small bearish candle with a wick at the bottom that didn't engulf this previous bullish candle. So even though this is telling me to get in for a sell, I could have maybe not got in because this candle here is a kind of a weak candle, okay? But if we draw up what a sell would have looked like, on US 30, I like to use roughly a 25 pip stop just to start, okay? And so roughly there we have a 25 and then a 50 pip TP is what I like to get in at. As you can see, we immediately went into drawdown. And I know John's style of trading is different than mine, and there is no wrong or right. But I do hold trades through drawdown, even if, you know, bullish engulfing against a bearish trend happens and so forth. We even broke the top of this here. I know John probably would have definitely been out of this trade.
Did you
But
just
yeah,
give
so
me
we
like
have a question?
headroom?
Okay. So, you know, if I would have took
don't
this
leave your
trade,
feet-
I would have experienced a drawdown, got close to my stop loss, and then eventually went down and hit a potential take profit. But as you can see here, the stochastic did come down and then immediately goes back up. And then it comes down again. And this entry here, where it crosses down again, is this big bearish candle with a wick at the top of the previous candle. Much better looking entry. Okay, so potentially another entry there. In this particular case, a 25 pip stop didn't really protect anything. I would have used a little bit higher stop there just to start. And then as the trade starts to go in my direction, I reduce my stop. But as you can see, if we enter here and we get another 50 pip TP, it immediately goes to that TP in a few candles. So those are the types of entries that I'm looking for. Okay, and we get another opportunity here. We get another break above here, the overbought, and then right on this candle here, we get another cross down here. So it's another potential entry. This time a 25 pip stop is good enough. And then I can take another 50. And as you can see here, I would already have drawn this support line up. And so even if I had a bigger take profit, let's just say, as soon as price came down here, I know that it has a very high likelihood of potentially reversing. So I would definitely be moving my stop loss if I'm trailing my stop loss, which I like to do. You know, the stop loss starts here. We'll just make that red. And then as the trade starts to trail down and get, you know, into profit, I like to move this into profit. And then as the price starts to get down to where I know is a potential reversal area, I get my stop, you know, very tight, maybe one candle back of where it's going down here. Or maybe I just take my profit here because I don't want to give any back if this bounces. And I just move my TP to here because I know that it has a chance of turning around here. And if we measure this from the resistance level here to where I might trail my stop, I mean, I might be giving back 23, 25 pips. Maybe I don't want to do that. Maybe I don't want to get greedy and see if this goes down. Maybe I just want to go ahead and take my profit down here and be done with it. Okay, but I do trail my stop as soon as this moves, you know, 20 pips in profit for sure. That way I don't give back my whole trade if it does come back on me. Okay, let's move this out of the way. And then the other thing is, so it did give me this trade and I did have room to go to here. Now, once this starts coming back, I am very wary of whether I'm going to be getting into more sells because I know I have this level here. And so it's really risky to be trying to get into another sell when I know that I have a previous time frame support level here. Okay. And so as you can see, it actually just breaks support a little bit. Never really gave us another entry here. But even if it had, even if this had gone above here and then below, and this would have looked like an entry, I probably would have just stayed out because of this level here that I had identified earlier. And, you know, sure enough, I mean, here you get a break above and then a breakdown. But by that time, you know, this is starting to move away from this support area, and I don't like it. Okay. Now, if this was to come back up here, if these EMAs were to cross down again, now I have more room again to go down. Okay. So I'd be looking at sells here. If these EMAs were in alignment or sells, I'd be more comfortable looking for sells here because I'm further away from this area. Okay. It's safer. But now that we've started to reverse and we did come off of a significant level here, I'm okay with taking counter trends. Okay. And we're, you know, actually getting a potential entry here. Okay. The other thing that I like to note is that this primary trend line is also acts as a level of support and resistance on its own. Okay. So when price comes to here, it will very often, you know, reject this line. Now it might reject it exactly right at the line. It might reject, you know, just before it gets there, and it might, you know, might punch through it and then reject. But it does reject this line quite often. So what I definitely recommend is that you are not entering a trade immediately, you know, or very close to this EMA. It is a heavy level of rejection. Okay. And by the same token, if price crosses here just a little bit, it's also not necessarily an indication you should jump right into a buy right on the other side, because like I said, sometimes it can break through a little bit and then reject. So having just a one candle come through here is not an automatic indication to yourself that you should be jumping into a buy here. What I like to do to establish that this trend is going up is not only do I like the price, which means the candlesticks, to come above this primary trend line, but I like these EMAs to also get above this primary trend line. So once I have the EMAs above and the price above, then I start using the stochastic here to look for an entry. Okay. So just as an indication, as an example here, we broke down here on this candle. And then, I could have potentially entered a sell here, but there's really no reason other than we broke below this line to enter a sell. And then obviously we keep going. But I'm waiting for these EMAs here to also cross so that price is below, EMAs are below. And then now I'm looking to my stochastic for an entry for a sell, which we had, one indication here, another indication on this candle, and then another indication on this candle. So we had 3 attempts to get into a sell here. Okay. And then after that, we haven't had any more sell indications. But with those 3 different indications, every single one of those could have potentially, made your pips for the day and you could have been done. So when you see something like this break through and you're like, oh, I missed that, there will always be another opportunity. Okay. And there'll be more opportunities later on as we're stay on the charts. Now I'm going to jump to NAS here and just give, a little analysis here. If we jump to the higher time frame on NAS and we see, this high here that it's made this morning, we don't really see anything to the left here, but if I just keep going up, if I go to the 1 hour, I finally see a lot of stuff here. Okay. We got, some peaks here, another higher one here, some more peaks here. So this was a very heavy area. Okay. And so sometimes we don't get a clean one line of support and resistance. Sometimes we get more of a zone. And if we were to drag this zone out, you can see we came right to it. So if we go back to our 1 minute, you can see we came right into that zone. And so there are multiple buy opportunities in here for NAS on the 1 minute. If you're using the stochastic here as a potential entry tool, we had, an entry around here. We had another entry around here, had another entry around here. All of them are winners. Okay. I can draw it up so you can see it, but you can just see it with your eyes as well, is when this crosses back above the blue, obviously there's lots of pips there. I'm not saying you would have grabbed all of them, but it does go 50 from that entry. And if we go to the next potential entry, which was here, when it crossed up across the blue here, there's another potential, 20 or so. And then over here, it crosses up again. And there's a few pips there. But, this was the best looking entry. I know because of my analysis that I did before I started trading that this is an area here where price might reject or stall or totally reverse from. And so I had, some good pips to here, and I would have been happy to just take, my pips here and not wait to see how far this is going to pull back. Okay. I would have trailed my stop very close into this zone. Now, obviously this is a big zone. We don't know if we're going to come to the top of it. We don't know if we're going to come to the very bottom of it. We don't know if we're just going to ignore the zone and break totally through. But you have to be a little bit careful when you do see something like this that you've analyzed from a higher time frame, and you want to be able to trail your stop and not give back a bunch of pips if price does come into here. Okay. Now we did get a pullback, okay, and then a break above here, and we don't know if this is going to completely reverse here, and this little push back up is just kind of like a fake out, but we do have a little bit of room to get back to this area. And so this would have been a safe trade to come all the way back and almost exactly right to this wick here on top. We did break it a little bit here. And so there was some potential pips all the way back up to the top there. Now we've already come back here, twice and almost 3 times. So I'd be very wary about getting into a buys right up here. Not enough room for profit, for my liking. Now, if you like to take, 3, 4, 5, 10 pips with, the potential to risk more than that, then that could be your trading style. But for my trading style, I'm looking for at least 20. And so if there's not room for 20, then I don't want to take it. And so, as you can see here, our EMAs, our secondary trend line indicator, the blue has crossed below the red. And so we are no longer currently in a buy situation with these EMAs here. Okay, we are in a overall buy situation because of the primary trend line over here being blue and us being above it. But these two lines would have to cross each other again for us to be looking for buys. And so right now we are in a situation where we are waiting for these two EMAs to cross back up to stay on trend, or we're waiting for this whole movement to come below this primary trend line to be looking for sells, or we're willing to take counter trend trades potentially here now that these have crossed. And and we do have a reason why we want to do counter, right? We have a triple peak up here that's rejection. If we go to my chart here on TradingView on NAS, we can see here that we have those 3 peaks here, and I have the RSI here, and this is just falling off dramatically. All right, and so it could give us an indication that we want to go down there. And so, maybe you are taking a counter. And if I was taking a counter, I'd be looking at these levels here of where I might need to trail my stop loss. So we have this low here, and then we have obviously another low here. Okay, and then we have the primary trend line. So price might come to around here and potentially head back up. And if it continues below here, it might come to around here and potentially head back up. And then, as I said, this is a, big rejection area when it comes to this line. And so it might, hit this line and, may not totally reverse, but it might take, go back far enough where you're giving up a lot of pips if you don't trail close when it gets to this line. And then obviously once it breaks this line and holds below this line, we are in full on, on trend with all the indicators heading back down. So that's a possibility. Okay. So those are my insights. Do some higher time frame analysis just to see where your potential areas where price might go to and reject from. You can use multiple tabs to look at different pairs or different time frames on the pairs. And then, I like to use the oversold here to look for sell opportunities when it breaks down, or the overbought here when it breaks down. And then over here, oversold, and when it breaks up to look for buy opportunities, as long as the other indicators are also in alignment. All right, John, that's all I got.
Wow, that's fantastic. Thanks very much, Jim. That's very,
Welcome.
very, very informative for everybody. Hope everybody enjoyed that. So if there's any questions, I'm going to stop the recording now so that we can take questions and everything.